Let's start off with that retail sales number. So the estimate's 0.5%. That's the consensus. You have your own estimate. You're at 1%, double the estimate. What's making you so bullish?
What we saw coming out of meeting with tons of companies this past week, and some companies have already given out on the public side, their December sales and holiday sales has been pretty good. When you look at companies like Lululemon, when you think about Abercrombie & Fitch, American Eagle beat, we had very good results. We've also had MasterCard and Visa talk about the holiday season, where Visa gave a better than expected increase of 4.8% year over year, MasterCard at 3.8% year over year, with some good categories. What's interesting is that Signet Jewelers reported a weaker sales forecast than planned, while MasterCard's results showed nearly a 6% increase in jewelry sales. So the consumer overall seems measured. And what we saw at this conference I went to earlier this week, sales increases were greater than the increases to profit. So more sales got done in the holiday. The compressed season led to a sense of urgency, and newness and product innovation drove demand. All
right, the conference you're talking about is the ICR conference. You met with 30 companies. You were very, very busy.
There wasn't a minute untouched.
Clearly. So, of course, you were talking sales, outlook, but I would imagine you were also talking tariffs. What are these companies telling you about tariffs, their preparedness so far, what they're expecting going forward?
It's a headwind. It can't not be a headwind. Last time what happened is everyone diversified their sourcing away from China. They're going to do that at an even more aggressive pace this time. And while none of them are talking about what price increases could be, that was part of the anecdote last time. And so you would expect it to be this time. How fast it happens is a question mark. NRF has already said that tariffs would reduce this consumer spend by nearly $50 to $80 billion. So it's a concern. Inventory levels, though, are not going up in advance of these tariffs coming up.
All right, so, it's fun to talk about American Eagle, Abercrombie. I mean, it's kind of, retail, it's fun, it's younger. But I want to talk about a company we've talked about it quite a few times, Walmart. You have it at Outperform. You have a price target of $100 on it. That's not really actually a big rise from where it's trading at right now. Does the narrative on Walmart change? Do you think everything's already priced in? Before you've told me it's less sensitive to tariffs. They're getting higher-end consumers. Why are you not more bullish about a name that seems to be well-positioned for this current situation?
I think a couple things. I think, first of all, you had a very good 2024. We think the outlook hasn't been provided for 2025. What we see in terms of, 600 store remodels that they're doing, the implications of sales increases compared to costs is what we want to watch. But we think that Walmart is primed for this type of economy, given the fact that even higher-end consumers are trading down to Walmart. So when the earnings come out, we'll see what adjustments need to be made, but we think they're right for this time.
I want to correct myself. Your price target, 105. So you're a bit more bullish than I initially said you were, but still kind of surprised because you've talked so glowingly about this company and its ability to get higher-end consumers.
I think overall, let's watch what the end of the year holds, because there's always surprises in what the income statement looks like and the outlook. But if I had to say, where do I see it going forward, it moves higher.